Welcome to Market XLS, your comprehensive Excel-based solution for portfolio analytics. Our tools cater specifically to portfolio managers and investment advisors, making portfolio management and analysis seamless and efficient, all within Excel. A portfolio is fundamentally a collection of symbols, representing assets like stocks, exchange-traded funds, mutual funds, or even cryptocurrencies, along with a proportion of your funds allocated to each. Once we have our portfolio, we're ready to utilize Market XLS suite of functions for advanced portfolio analytics. Market XLS provides numerous functions that accept your portfolio as an argument alongside other optional parameters to compute various portfolio analytics. Let's demonstrate some examples using a few significant functions. We'll start with the Sharpe ratio. The Sharpe ratio measures the performance of an investment compared to a risk-free asset after adjusting for its risk. Here's the formula for that, equals Sharpe ratio, portfolio range. Next, the Sortino ratio, a risk-adjusted performance measure of a portfolio. It is a modification of the Sharpe ratio, but penalizes only those returns falling below a user-specified target. The formula for that is equals Sortino ratio, portfolio range. Then we have the monthly returns function, which calculates the percent increase or decrease in returns compared to the previous month. The formula is equals monthly returns, portfolio range. Finally, let's take a look at the portfolio efficient frontier chart function. This tool generates a graph showing the set of portfolios that satisfy the condition of having no other portfolio with a higher expected return at the same risk level. The formula is equals portfolio efficient frontier chart, portfolio range. We also provide functions to calculate other important portfolio indicators, such as the maximum drawdown, trainer ratio, portfolio beta, positive periods, see a GR portfolio volatility, value at risk, drawdown, and wealth index, among others. Our next part will deep dive into our unique efficient frontier chart function, one of our most significant offerings, designed to help you effectively analyze your portfolio. Now, let's take a deep dive into the portfolio efficient frontier chart. The blue line on the chart represents the various combinations of risk, also referred to as volatility, and returns for different allocations of your portfolio into the symbols. The green square signifies your current portfolio's position on the efficient frontier. The efficient frontier is a concept in modern portfolio theory, indicating the set of portfolios that provide the highest expected return for a defined level of risk, or the lowest risk for a given level of expected return. Interestingly, you will notice 5 other portfolios indicated on the chart. These portfolios represent different risk profiles, namely conservative, moderate, balanced, growth, and aggressive. For instance, an aggressive stance increases both potential risks and potential gains. As you move along the blue line, a conservative portfolio would offer the least return with minimal risk. There's also a portfolio marked on the line. If you were to move vertically from your portfolio to this point, it would mean you could have achieved higher returns with the same amount of risk. This optimal scenario involves no increase in risk, but a potential increase in returns. The second part of the report presents a column for each portfolio combination. It shows you how your portfolio could have been allocated according to your risk profile or as per their portfolio, with proportions provided to attain a specific return and risk level. The bold red text on the chart compares your portfolio and other potential portfolios to benchmarks like gold, real estate, and SPY. The default look-back period for the analysis is 12 months. However, you can modify it by providing an optional argument of the number of months you wish to include in the analysis. In our implementation, we exclude the risk-free rate of return for easier verifications, despite traditional efficient frontier analysis factoring in the risk-free rate. The standard granularity we use is monthly returns instead of daily. The run date is another crucial argument. The default run date is today's date, meaning the analysis will go back 12 months from the present day. However, if you want to conduct this analysis from a specific date in the past, you can input the date in year, month, and day format. This can be especially useful to exclude eventful periods from your analysis, such as the COVID-19 pandemic. The equals portfolio efficient frontier data, portfolio range, function complements the chart by providing the actual data behind it. This function calculates and returns the risk and return metrics for various combinations of your portfolio's asset allocations, helping you make informed decisions about optimal asset distribution. If you're a registered investment advisor, offering this level of detailed analysis to your clients could be a significant advantage. It's a unique and insightful way to dive deep into their portfolios. This approach not only adds value to your service, but could also help attract more clients. To help with this, we offer a brandable web app where you can create efficient frontier reports, complete with your logo, contact information, and personalized commentary. You can offer these customized reports to your clients for free as a value-added service. To all our existing Market XLS customers, these functions, including the Efficient Frontier function, are available in all our plans. Elevate your portfolio analytics with Market XLS. To book a demo, visit MarketXLS.com or contact us at support@MarketXLS.com.